Hello, Assalamualaikum. So this is chapter 12. This is our last chapter for ENT300 with the title Financial Plan. Okay, a little bit about the learning outcomes for this chapter. Okay, so in this chapter, we want to enable students to prepare relevant statements for the financial plan. Okay, to develop skills of preparing a financial plan, and we want to help you, okay, to evaluate the financial visibility of the proposed business or project. Okay, so let's start. A financial plan is a plan that shows the short and long-term financial requirements in order to start a new business or project. Okay, so it will shows the requirements, okay, to be financed, okay, using the internal and external resources. So we will know how much to finance the business. Okay. A financial plan should also include the projections of the financial statements such as the cash flow, profit and loss, and balance sheets, meaning that when we prepare the financial statement, meaning that we will know about our cash flow, okay, about we can predict our profit and loss, and we will see our balance sheet at the required time. Okay, and finally, a financial plan should also include some financial analysis, okay, in order to determine the viability of the proposed business and also project. Okay, so why is it important for us to prepare the financial plan? The first one is because we want to determine the amount of money to be invested. Okay, so when we prepare the project cost, we'll know how much that we need in order for us to start the business. Okay, to identify the relevant sources of finance and the purpose, so we will know how to finance our businesses using what aspect. Okay, to ensure that the initial capital is sufficient, because when we prepare the financial plan, we will know, we will be able to calculate the capital needed to start the business. Okay. To appraise the viability before actual investment is committed, okay, we will see whether if we contribute or if we invest in this business, is it worth it? Okay, and as a guideline for the implementation. Okay, so sources of financial information. Okay, so for the operational budget, we'll get our sources, okay, information from the administrative budget, marketing budget, and also operation budget. Okay, so we already prepare all these budgets, okay, in our business plan. Okay, so after we have all of these figures, then we will prepare the financial plan. Okay, so from the financial budget, we will see, okay, our project implementation costs, our sources of finance, okay, projected cash flow statement, projected profit and loss statement, and also projected balance sheet statements. Okay, what are the steps needed in order for us to prepare the financial plan? Okay, so the first one, we need to prepare the project implementation cost schedule. Okay, so we have to prepare the table of depreciation for each fixed asset. Okay, step 2, prepare the source of fund to finance the project's cost. Okay, prepare a loan amortization schedule for term loan. If we have our project predict that we need loan, so we have to prepare the loan amortization, meaning that the monthly that we have to pay, okay, for the term loan. Prepare hire purchase repayment, okay, if hire purchase financing is used. Okay, the third step, okay, prepare the pro forma cash flow statement. Okay, in this case, we prepare it for 3 years. Okay, for year 1, bi-monthly, like we used to do for the marketing plan, operation plan. For year 2 and 3, we do it just only for annually. Okay, in step 4, we're going to prepare the pro forma trading profit and loss statement also for 3 years. Okay, so for manufacturing companies, include manufacturing accounts, okay, to prepare the cost of goods sold. Okay, step 5, we need to prepare the pro forma balance sheet statement also for the 3 years. Okay, so for the project implementation cost, okay, the total cost, okay, for the short and long term cost needed to implement the proposed business or project. Okay, the long term cost refer to capital expenditure. That is when we want to buy the fixed asset, for example, land, building, machinery, equipment, furniture, and vehicles. All these we consider categorized as the fixed asset. Okay, for short-term costs, okay, refer to expenditure to finance day-to-day operations of the business. For example, our raw materials, inventory, wages, salaries, utilities, and other overhead. Okay, mean that we need all this expenditure, okay, in our day-to-day activity. Okay, so this is what we call as the short-term cost. While for this one, for the fixed asset, is considered as the long-term cost. Okay. In project cost, the elements in project cost, we will have the capital expenditure. Okay, for example, land, building, renovation to the building, machinery, equipment, and also furniture and fixtures. So these are all the fixed asset. Okay. We also have the working capital, okay, admin, marketing, operation budgets. Working capital means that all these are the expenses, the monthly expenses, and we have other expenses. Okay, if you still remember when we prepare the marketing budget, operation budget, and also the admin budget. Okay, we also have the other expenses, where the expenses only occur once a year, okay, or once for the while the business operated. Okay, for example, we have the pre-operational costs, okay, the costs that involved before we start the business. For example, like business registration and licenses, okay, legal fees, road tax and insurance, and also stamp duties and etc. All these are the expenses that we incur before we start our businesses. Okay, we also have deposits. Okay, for example, we have rental deposit, utilities deposit, where we only pay once. Okay, and provisions for contingencies. Provisions for contingencies mean that we prepare ahead for the some contingencies, okay, as a contingencies plan for our business, okay, in case there's emergency, the cost changes, so we at least we have the emergencies. For example, here we can prepare it from 2 to 10%, okay, of our total cost. So this example for the project implementation cost that you're gonna prepare, okay, I will show you on how to use the template to prepare all this. Okay. So you're gonna look like this. Okay. Next, we have the sources of finance. Okay, sources of finance refers to the source where long-term fund to finance the project cost is secured. Okay, it can be internally or externally generated. Okay, for example, the elements of source of finance, we have the equity contributions. For example, by your cash, okay, cash money, and also you bring in the assets. Or by using the term loan, you loan from financial institution or from hire purchase. Okay, you bought from the also from the from the financial institution. Okay, so this is example of the sources of finance. Okay, so total here is this is the total of the sources of for your business. Okay. This is the loan amortization schedule. The the payment that you need to pay by monthly and also yearly. Hire purchase repayment. Yeah. Okay, so let's see the cash flow pro forma statement. Okay, when you prepare the financial statement, of course, one of the financial statement that you're going to prepare is the cash flow. Okay, cash flow is projected statements of cash inflows and outflows throughout the plan period. Okay, it says projected statement because we only predict it's not happened yet, but we only predict that these are the our cash. Okay, so it shows the following in the cash flow statement. We will show the cash inflows, cash outflows, deficit or surplus, and also the cash position at the beginning of the statement or at the end of the balance statement. Okay, so the cash inflows, okay, in cash inflows we will have the equity, okay, for the cash only. We calculate the term loan, cash, sales, collection of receivable when someone paid back their debt to you, and also the sales of asset, meaning that we will get the cash inflow into our business from all these sources. Okay. The cash outflows mean that the cash go out from our business. For example, operational expenditure, marketing expenditure, administrative expenditure, loan repayment, you pay for the loan, okay, hire purchase repayment, purchase of fixed asset, pre-operational expenses, and also miscellaneous expenses. Mean that all of these require you to pay or the money go out from your business. So we call it as the cash outflow. Okay, we also have cash surplus or deficit. Okay, inflows more than outflows mean that the money come in is more than you spend the money. Outflows, so you will get surplus. Okay, however, if the inflows is less than outflows, mean that you get less than what you have spent. Okay, so you will get deficit. Okay, mean that you spend over from the money that you get. Okay, so of course you will get deficit. Okay, you also will know the cash position in your cash flow. Okay, beginning cash plus surplus or minus deficit, you will get the ending cash. Okay, so the ending cash balance for a particular month, it will become the beginning balance of the consecutive of the next month. Okay. This is example for the cash flow statement, okay, performance statement. So in this format, okay, we'll show you on how to key in this, okay, using the financial template. Okay. Example, okay. Next is the profit and loss statement, pro forma statement, a projected statement which shows the expected profit or loss through the planned period for 3 consecutive years. Prepare it for the 3 years. Okay. For manufacturing companies, first we need to prepare the manufacturing account. For trading companies, first we need to prepare the trading account where we will calculate the cost of goods sold. Okay. And also for the service companies, we straight away prepare the profit and loss statement because it's the services. Okay. So these are the elements in the profit and loss statement. Okay, so this is for the manufacturing and trading companies. Okay, sales minus cost of goods sold, you will get the gross profit. Okay, and then gross profit less with the expenses, all the expenses, then you will get net profit. Okay, for the service companies, okay, you have the sales amount and then less the expenditures. Okay, and then straight away get the net profit. So this is the example where you can see the net profit, okay, the gross profit and also the net profit of your company. Okay, we assume that you got the profit. Okay, be positive. Okay, service companies. Okay, so here we get the net profit. Okay, next is the balance sheet. Okay, it is a projected statement, okay, which shows the financial position of the company, a specific point in time in terms of asset owned and how those assets are financed. Mean that in the balance sheet we will see how much money asset that we have at that time. Okay, the statements are prepared for the period of 3 years, so we also prepare it for the 3 years. The elements in balance sheet, what we have in balance sheet, we have fixed asset, okay, where we list all the fixed asset, okay, as its book value, cost minus the accumulated depreciation, okay, book value. The current assets, okay, list all current assets. For example, the cash that we have at that time, okay, stocks, account receivable, how many people owe us, okay, and also the deposits, okay. Equity, okay, equity contribution, the cash and asset, okay, plus the net profit, accumulated net profit. This what considered as the equity, and also the long-term liabilities, okay, term loans, year-end balance, how much the balance of our loan, and also the hire purchase balance at that year. Okay. So this is the balance sheet, okay, for the manufacturing and trading companies. So you can see here, this is the list of fixed assets, okay, plus the current assets. So we get the total assets here. So the total asset must be equal, okay, with the total of equity plus the long-term liabilities. Okay, so it will be balanced between the fixed asset and also the equity and liabilities. This is for the service companies. Okay, also the same. Okay, fixed asset, current asset. Okay, equals with the equity plus liabilities. So, basically that's all for the financial statement, financial plan. Okay, so mean that for the financial statement, those are the important statement that we need to prepare. Okay, so I'll see you in the videos on how to prepare the financial plan for your business plan. Thank you so much.